Hi everyone. Today let's talk about what Jamie Dimon has to say about the 2024 and 25 economies. Then we'll talk about the Iranian strikes over the last 24 hours. Then we'll get into our usual data and charts. Then we'll finish up with my accounts for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Jamie Dimon warned of some powerful forces. Let's see exactly what those are. And he did that during the World Economic Forum in Davos. And starting off here, you can see he's talking about geopolitical risk. So Ukraine, activity in Israel, the Red Sea, quantitative tightening. And then he questions what exactly is quantitative tightening. They describe it here as the Fed reducing its balance sheet, allowing those bonds to roll off, and generally reducing the overall amount of money in the M2 supply. And then he mentions that the U.S. economy has defied expectations. Everything has been looking quite well despite high inflation, high interest rates. And he says it's a mistake to assume that everything is hunky-dory. I don't know anybody who's used the term hunky-dory in the last decade or so, but here it is. And he's saying that there's potentially some risk in markets. And they also mention here this is not the first time he's warning of some economic downturns to come. In 2022, he did mention a potential economic hurricane coming on the back of quantitative tightening and the Ukraine conflict. So far, that has not materialized. But he is sounding the alarm once again. There's risk out there and don't be lulled into complacency. Speaking of those risks, we did have Iran broaden out this most recent conflict, attacking Syria, Iraq, and Pakistan. Pretty interesting there over the last 24-hour period. They have violated international law, according to Iraq's foreign minister. I'm pretty sure that's universal. Them attacking their neighbor states obviously is not good. And the question is, where does it go from now? They've obviously been a critic of Israel in the Israel-Hamas war that's been going on recently. They've been backing the Houthis. We talked about that recently as well. They also attacked once again in the Red Sea, hitting a U.S. flagged ship. And we haven't really seen any retaliation from that either. So the question is, what happens now? Is Iraq going to retaliate? Pakistan also has a significant military. They could retaliate as well. It's also interesting that they're attacking their fellow neighbor states versus the United States in the Red Sea. So they're kind of expanding out this conflict in a way that doesn't seem to make very much sense. They did mention that they thought the targets in northern Syria were the Islamic State, not Syria itself. And then Pakistan came out and strongly condemned the unprovoked violations of its airspace by Iran and said they killed 2 children and injured 3 more. So not great there from Pakistan. I think that's the most concerning. Iraq, a little bit less so. Syria, not so much. But Pakistan, I definitely think could have a strong response. And the question is, what is the United States going to do about this and its allies in the region? And they mention here that they think this attack is isolating Iran. And I would have to agree. I think this is going to kind of close them off from the rest of the world. Attacking your neighbors is not a great way to do diplomacy. And this continues to be an ongoing thing that could impact global shipping lanes, where about 33% of global shipping goes through the Red Sea. Moving over to the Fear and Greed Index, look at that massive step down we saw today. We were at 70 yesterday, down to 58 today. Let's look at that timeline. This has been rolling over. We talked about it. Had a lower high setup here, pulled back significantly. Now we have a lower low. Still an extreme greed on momentum. Strength though, step down to greed. Breadth, stepping down to greed. Put call ratio into fear. Volatility, stepping up again here into fear. Talked about that breakout above the 50 moving average yesterday. Safe haven demand into fear. So we're starting to see just a little bit of weakness in markets. I think there's a long way to go on this down move, but we're definitely seeing it here on this indicator. Moving over to seasonality, that was day 11. It was supposed to be a slight move up. We ended up getting a dip down. I think this is rolling into day 12 and 13 already. Expect another down day tomorrow, in my opinion. We'll take a closer look at that on the charts, but weakness going into the options expiration. Moving over to the economic calendar. Eurozone CPI numbers came in at expectations. Core and headline retail sales for the US. Core numbers came in better than expected. Headline numbers better than expected. So retail sales, US consumer continues to do well. And that was not enough to prop up markets. We still fell throughout the session. And that was pretty much it for the day. Let's look at tomorrow. Initial jobless claims, Philly Fed manufacturing, crude, as well as tips and Fed balance sheet. Not a whole lot, but fairly interesting. And then looking at the Friday session, existing home sales, Michigan numbers. which is pretty light for economic data. Moving over to max pain, down at 472, still drifting towards that 460 number for max pain for the end of the week. Total options, 5.38 million. Tons and tons of options. Put call ratio, 1.75. Not a ton of puts relative to what we've been seeing. But again, 460 is your max pain. 460 to 470 does make sense for a finish. Should give you at least a couple of points of more downside before we get to that really major put wall at 460. So I don't think we'll break that level over the next few days, but I do think we're going to head in that direction. Moving over to the charts, we got another gap down and fall. So that was expected based on my thesis here. So we have a clear double top at this point. We've pulled back pretty dramatically from that level. On the SPY, 477.46 was that level. And we're all the way down at 472.29 now. Touch my next level at 470.80. You can see that here on the hourly chart, bounced a little bit into the end of the session. Pretty strong volume there, momentum slightly bullish on that move. I wouldn't expect it to hold really, and you can see it is down a little bit after hours. Not a lot, but worth paying attention to. And then momentum here on the daily chart, step down towards bearish again. RSI continuing to step more bearish. Makes sense. This thesis is coming to fruition, even with a little bit of an overthrow on that right shoulder. If you want to look at it as a double top at this point, that also works. However you want to look at it, this does look bearish to me, even if we get a little bit of a short-term pop off of that 1 hour momentum. Moving over to the NASDAQ, similar thesis, much bigger down move, much bigger pullback, fairly interesting. You can see that gap down through the trend line. We'll go ahead and extend that out a little bit. Touched it pre-market, broke down all the way to these lows at 402.98, right around that 403 area, bounced strongly, pulled back, touched the 144, touched that longer term trend line, rallied up to the 21, slightly bullish momentum, so a little bit stronger there on the NASDAQ, but momentum, you can see that first step towards bearish, broke below the SMA on RSI, big wick to the downside. I would expect this to continue lower, still watching this as a lower high setup, and I would expect this to continue lower tomorrow, right at that 21 EMA. On the hourly chart, broke down a little bit after hours and still looks weak, just like the SPY. Moving over to the Russell and the Dow. Russell down 0.71, Dow 0.25, gap down and fell. Ended up holding that 198 level after getting all the way towards these tops here. Let's go ahead and put a short-term level at those previous tops. I don't think it'll be super important, but right in that area, 187.78, touched that, bounced a little bit. Momentum bearish, RSI bearish. Still looks weak to me. And then looking at the Dow, gap down, fell, retested that level. Let's look at it on the hourly. So big move down pre-market, touched that level, rejected from there. I would expect that to remain bearish going into tomorrow's session. Could argue for a little bit of a double bottom, which is interesting, right at that 21 EMA. Potential for a little bit of bullishness. Let's see the hourly chart here, see how that compares. Pretty interesting, actually. So we touched that shorter term support, had a higher low setup, and then potentially looking for a break there. Shorter time frame showing a little bit of bullishness, but I would be hesitant to jump in too aggressively there. Moving over to the equal weights on the hourly, gap down, move to that next level, 153.19, touched that, bounced a little bit to the 9 EMA. Slight step up on momentum as well as volume. Pretty interesting. Looking at the daily chart though, similar to everything else, you had a lower high breakdown. You have a new low here, doji. You could always argue for a island reversal, but realistically, I would expect this to follow through. Bearish momentum, bearish RSI going into tomorrow's session. Moving over to Apple and Tesla, both of these were bearish on the day. You can see those gaps lower. Big wick to the downside here on Apple, down to 180.32, took out this previous low. Ended up holding on the hourly chart and rallied up back above 182.37. Pretty interesting. Looking at the daily chart, continues to hold that 200 SMA. If it bottoms here, you could argue slightly higher low from this previous low. Something worth watching there on Apple. Tesla, on the other hand, we have a new low versus this previous low in yesterday's pre-market. The wicks here were the pre-market low on this 8 o'clock candle, which is interesting. And then we got back above 214 to end the session. Slightly bullish momentum. Let's look at it on the daily chart. This is an important level, and it is holding. Got down to 212. Something to watch there. But 214 continues to hold after this pretty significant down move. So if it holds here, something to watch. Momentum and RSI are both bearish, but critical level, it did bounce, and it is up a little bit after hours. Moving over to staples and discretionaries. Staples continues to hold in the same region. Threw a bunch of wicks to the downside all the way down to 72.12. It is below 72.50, which is not great. Did test it and break down from that level. So staples showing a little bit of weakness at resistance. Discretionaries gapped lower. Tried to rally mid-session, broke down even lower towards the end of the session before bouncing just like everything else. got above the 9 EMA, a little bit of volume, a little bit of RSI. Let's look at it on the daily. Didn't quite get to that 55 EMA. That's where I would expect to get to at least here in the short term, 170.13 on the daily chart. It's down a little bit after hours. Let's get this on the daily as well. Inside candle, gap down and rallied like everything else, 0.07, so still holding its value. Below the SMA, slight bearish volume, slight bearish momentum. Not great on staples, but still looks better than discretionaries. Moving over to oil and gas and energy. These had a terrible day, gap down and fell. Energy held 127.99 after touching it here. We expected some follow through after those big bear candles yesterday. Sure enough, got it here. So oil and gas, critical level, interesting, bearish momentum, bearish RSI. Energy gapped through the level, retested it, and then broke back down. Momentum and RSI the same here. This is a lower low versus the low in mid-December, so that doesn't look great either. Next support for me is all the way down at 78.47. You can see last time we were in that area is going back to May of 23. So this has been a really strong move here for energy. Talked about it before, but we were all the way up at 92.80, pulling back now to these May lows in that 78.47 area. And then the actual wick lows were down at 76.37. So this could actually go quite a bit lower. Momentum and RSI, like I said, both bearish. Moving over to the 20 and 50-day averages. These continue to crater as we expected them to. 20-day breadth broke below 36.60. Next level is 16. It is oversold. Momentum bearish. I would expect it to get to 16 at this point based on the price action we're seeing. You can see that previous low here from 27 October. And then looking at the 50-day average, that is the biggest candle of downward price action we've seen in a very long time. Got below the 55 EMA at 71.90. Touched my level 68.66, bounced a little bit. If that breaks tomorrow, 62.25. And then you got the 144 and the 200 sitting down around that 56 area. So something to watch. 52 to 56 is your next price target for dynamic support. And then momentum here. And then RSI and momentum, both quite bearish. Almost oversold on the RSI, but could absolutely go lower. Moving over to yields. Both of these had a really strong move on yields. Popped up pretty well. 2-year up to 4 1/3 back into this consolidation. 10-year actually got above this previous high up to 4.1. Still looking at that 55, sitting at 4.19. Interesting to see the 2-year getting above the 9 and 21 EMAs. Bullish momentum, bullish RSI on both of these. And like I've been saying, looking for that reversion. Does seem like it's coming here soon. Moving over to the put call ratio. We did hit my first indicator here at 1.4. So quite a bit of puts in the market. Could be a temporary bottom, something to watch. Did touch it quickly, pulled right back to that 1 area. See what happens. This is something to watch. 1.4 isn't super strong. You can see we do hit it fairly regularly. Once we get to that 2 range, that is very, very high. And that tends to be the bottom of markets, at least in the short term. And you can see going back to October of 22, September, October, the 1.4 area is what we were hitting. And then that ended up being a really strong rally. Touched it again here in December of 22, and then had another pretty decent rally. So something to watch. It is a fairly important level, and we did touch it today. Moving over to the dollar, we did get another rally. Did touch my next level. Did reject from that level a little bit at 103.6. We're below the 9 and 21 EMAs, bearish momentum on the hourly chart. Daily chart, however, continues to show bullish momentum as well. Look at that doji, almost completely flat after touching 200 and almost that 144 EMA. And to me, I would expect this to continue higher. Maybe pulls back to the 55 on the hourly at 103.17. That could be support. But if it holds right here, I would expect it to test and then potentially break out some more. Dollar strength does make sense to me with the bearishness that we're seeing in markets. Moving over to bonds, JNK gap down and fell. TLT gap down and held. Pretty interesting, right at that trend line. It's between the two trends here. It's above that 144. Momentum and RSI still bearish. 10-year continues to look strong. I would expect TLT to go lower. Honestly, I'm surprised it didn't fall more with the move we saw in yields, but both of these continue to look weak to me. Moving over to volatility, move index actually fell today. Pretty interesting. VIX, on the other hand, gapped up, rallied, got above that 1490 level for a little bit, almost hit the 200, almost hit these trend lines, then pulled back, ended up closing below that level. Momentum bullish, RSI bullish. I think we need to actually go ahead and chart these here now. Does seem like we're starting to see a bit of a upward channel. We did almost get to the top of that. We'll see if we get another one into this range here between 15 and 16, but the VIX continuing to show a little bit of strength going into tomorrow's session. Moving over to my accounts, you can see I was down a few $100s. Not terrible considering that the NASDAQ was down about 0.5%. I was down about 0.25% even with my leverage, so still doing fine there. You can see these calls on those positions are all the way down at $3.99 and $3.96 for the next 3 weeks, so still lots of protection. You can see $15 and almost $14 on those positions. Still holding, no issues. And then looking at the IWM, still holding 16 days out. Should be able to roll that out here soon if I need to. If we start to see a little bit of bullishness, but I'm almost out of the money on that. So just watching that one pretty closely. XLE, I did close that call that I had, took the profits on that. Now I just have the protection from that call spread. That's probably going to expire worthless. Trying to get rid of it, but probably not going to happen. And then I did pick up a TQQs here at 47.50 for 49 cents. I got almost all the profit on that. Probably should have taken it off at the end of the session and then look for a little bit more bearishness in tomorrow's session. We'll see what happens early and see if I can reestablish that at a lower price for a bigger credit, as I do expect more bearishness tomorrow. Moving over to my P&L graph, you can see stock price all the way up here. I don't start to lose money until we get at least below the call strikes on an expiration basis. So plenty of protection. And you can see my break even is all the way down here at 383.60 or so. So lots of protection, even if I'm showing some short-term losses, still trying to collect all of that money at expiration, about $5,500. Let me know down in the comment section what you think of Jamie Dimon or Iran's most recent escalations. Are those going to affect markets? And if so, how much do you think it's going to affect markets? Definitely interesting. Otherwise, like and subscribe if you got any value out of this, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.